Good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 from Monday, January the 8th, 2023. A very, very powerful start to our new week in both the NASDAQ and the S&P and the Dow and the Russell, all the markets. And what we basically saw was, again, a turn where it appeared that asset managers it officially is like the second week of January, and that is normally a time period where we have the new money coming in, IRA money, 401k money, etc., coming in on that second week. And here we are in the second week, and it does appear that that is exactly what happened. There's a couple of news stories for NASDAQ stocks, one of them being NVIDIA, announcing, I think it was 3 new chips, powerful chips, according to the report, for gaming and for some AI work. So that took NVIDIA up 31 by the end of the day, and it's bid higher after the close. So here we are. Now we're in preparation for what will end up being year-end plus forward guidance moving out here in the first quarter. Now, that all begins on Friday, but it begins with the banks, who actually were taking a little bit of a hit today. Not much, but a little bit of a hit. JP Morgan down a little bit. Goldman Sachs actually finished up by the end of the day. So mixed bag until basically the afternoon session, and then into the close, it was just like buy it, buy it, buy it, buy it. And what does that suggest for the NASDAQ? It does keep both counts, as I presented over the weekend, right in place. I'm not making any changes just yet, but trust me, I'm paying very close attention to how this is all going to unfold. At best, on my 4-hour chart, I continue to label the high as the completion point for primary wave B. So before you start talking about how, it's all bullish and we're going to the moon, please understand, I am following this very, very closely. There's no need to discuss. I have my reasons for putting the B wave up there. Those remain valid. And in all honesty, this wave would have to break up here to, on an Elliott wave basis, break that pattern. Now, as I also talked about on Saturday, we have that possibility being that in the S&P, it also skyrocketed today, had a very strong day, finished up 63, was up above 4,800 briefly. I think it was up 67 or 68 at one point. And then in that after hour, kind of saw some profit taking, just things came a little bit down on that respect. So I'll get to the S&P in a moment, but on that balance, if the S&P is headed, because basically at one point today, it was within $40 of that all-time high at 48.41. So one more day and we're there. Would it be an equal amount in the NASDAQ, which actually led the race today and actually won that race, the NASDAQ being up 328 points by the bell, with the cash market being up 343. So we're going to give it a little bit more time, because as I said, on a wave 2, it's just below that 618. It got up and just poked its nose above the 4-hour 50 period simple moving average. We got the 200 right above that resistance at 16,826, 827. And if it starts to break here, then we're likely going to start to accelerate again as we get up towards 16,960 and then again 17,000. Now, I'm going to lay it out right now that yes, the market may need to get all the way up here before it turns lower, if indeed this holds in place. So, but right now, I am definitely, as a trader, playing whatever is trading in front of me, because again, remember, I'm a day trader. So even if it is a position trader, I am positioning to take advantage of some trades basically in option trades and selling premium. And there are other trades where, under zero DTE options, where buying is very relevant, and buying in the queues produce some very solid profits if you're playing zero DTE, realizing that they expire and they're worthless after today. So there was a lot to do while we're anticipating where the market's going to go. If you are a long-term trader and you're still waiting or believing that the market is just going to take off from here, so be it. But I would think that, if anything, we would be in that, still in that minor fifth wave, and how that would work under the, which is now the alternate. The minute 3 would move here, the minute 4 would come here, and I'm fully aware of what that overlaps right there. Fully aware. That's why I've left it here. But if it had to be allowed, I can take it down to a closing basis and brings it up to here, leaving this intact. And the closing basis would bring that high down to this level over here. So again, it all would fit. And then with an irregular for wave 2 coming in down here. So everything remains, except I can move that 3 back over to here. This would be a 4. I believe still that it counts out better as a 5 waves down. But I can put the 1 here, the 2 here, and then work the 3 down, the 4 and the 5 and the C wave down to here. So it could be the A wave, B wave, C wave, wave 4. 1, 2, 3, possibly, or 1, 2, part of 3. So as it's left right now, if it came crashing down tomorrow, this is left at 3, we're looking for something to go further lower. But right now, the givens are that that's not going to happen. But again, I don't think a lot of people were expecting it to be as strong as it was today. We had fibs lined up to show that, yep, it could be. And don't forget that this is the opening. It's just part of the opening, and then it opened in that first hour. And that first hour was trading above 16,700 after starting closer to 16,500. So it was pretty decent. It was a very, very solid move today. Very, very, very solid. I mean, they get back down to the hourly chart, and then we can just kind of take a peek on the inside. We have Monday opening. So we basically started just below 16,500, and that first hour ended up at 16,600. So it was a decent over 100-point move, and then just was up, and away. That's on the hourly chart. If you trade off the hourly chart, you just stayed long and you made money all day. And that was a good thing. So again, depending on how you trade and what you trade, if you're believing that these earnings are just going to be great, then I appreciate the comments, but please have something to back it up other than history. So, because it's just like, if that's running on the status quo, and that doesn't tell me anything. So if you're going to share, I appreciate the shares, and I'm always appreciative of people sharing their counts and why they're counting in a particular fashion. But to say that, oh, it's always bullish, it's so bullish, we're going to new highs, it's like, fine. That really doesn't tell us very much. In any case, here in the NASDAQ, I think it either could be an ABC, and we're going to finish up that C wave, or it could be a 1, 2, and we're inside the third of a minute fifth wave. Now, if that's the case, I'm just going to toss this out there. I'm going to back out to that 4-hour chart, and we're going to take a peek. Open it up from here. And again, that's a very large first wave. Wave 1 did tend to extend. Come on. There you go. And we're going to go over here to this fourth wave. Now, 618 is 17,590. 100% where wave 5 would equal wave 1 would tend to leave probably that third wave as the shortest wave. So that I don't qualify. So in this particular case, 0.618 is going to be the candidate, should the market continue to just go and likely get up into here. First of all, we need to get above 17,131. Then we have this other resistance at 17,467, which has remained there. I did not take it down. Then we have one, if indeed this is the fourth wave, so that's the only way it's going to be usable, folks, that have resistance for a fifth wave at 17,591, we'll call it. And that would be a very, very nice rally, plenty to trade. It's the NASDAQ. Now I'm going to take this back off because I'm not confirming that low just yet. And bringing it back down, let's take a look at what we have on the hourly chart in terms of our moving averages. You can see that the 200, yep, crested, now rising. The 20 now being more angled along with that 8. We have the 200, going to provide some resistance here on the hourly chart, right as it did, came right up almost to it this afternoon. And then we have it right at 16,813.14. And then we have additional resistance at 826. And then a break above that could give us that thrust. But right now, let's take a peek and go like we have 1, 2. If this was 3, we're looking for a 4. You can run your fibs from the bottom of wave 2, which would be right there. And notice I'm not labeling it because it's not totally clear yet. And then, but here we have, if we're going to pull back, and it would be just off of this portion of the advance, then we have 16,709, 16,645, 46, 47, around in there, and then 16,594. That would be the 50% retracement of the rally, the gist of the rally, starting overnight and ending at the close today. So again, either way, if it's going to be a fourth wave, we're not looking for it to come in that deep. We're not looking for it to get all the way down here. In fact, I probably wouldn't even be looking for it to get down to 16,595. I mean, it could, but 382, yeah, that'd be pretty decent. Get it down and then rally it back again. Now, again, that fifth wave, all it needs to do is get itself above 17,162. The high itself is 17,165. So, excuse me, it needs to get above 65. So anywhere up in there, according to what structure would tell us, could complete it. If wave 3 is done, that's what it is. Either that or it's ABC. So one way or the other, we're going to get to the bottom of it. We're just going to let it play out another day. I realize upside potential, sure enough. Hourly, very overbought, excuse me, very overbought. And let me bring it down. Let's take a look at the 4-hour chart. Not quite, but pretty vertical. So we're going to see it's like the other times it's gotten pretty overbought. It kind of pulled itself in. We did that, not even off of oversold. Excuse me, not even off of overbought. We did start higher off of oversold, that's for sure. And then it just got vertical on us today. Over in the S&P, interesting day in the S&P. Again, I did not actually change this. I left it open, and I did suggest and also discussed the possibility as an alternate count here, because it just still counts best as exactly as I've marked it right now. What we had was a minor third wave completing. I didn't particularly like it there and call this minor 4, and that's minor 5, and then the C wave and the primary B wave. It counts much better the way that we are working it through. Minor wave 4, I'm going to mark it complete here. That's a very beautiful rally. It got itself back above 4,800. This high here is 4,841.50. So again, good stuff. Now, connecting minor wave 1 to the projections for minor wave 5. If we go to the 100%, which is again, that's where we'd have to start, that the fifth wave, when compared to the first wave, the first most common is equality. Equality comes in at 49.93. The second most common is even higher, and that would be questionable, but you're looking at 51.72. That is it. Technically, it is possible. Reality could be something different, but we cannot discount. I mean, I don't know what these earnings are going to say, and I can't tell you how the algorithms and traders are going to react to it. So we got to wait. Now, the third most common and the one that could win the prize is the 0.618, where wave 5 is 0.618 of wave 1. And that comes in at 48, 81, 82, 85, all in that area. Now, that for certain takes us above 48, 41, 50, clears it by 40 points. So that would be a very nice new high. And it would then be down on what structure told us. So again, there was a low, put the 4 there. If this is 1, A, B, C, 2, 1, 2, I mean, pullbacks were like almost non-existent today. Inside the moves it was a little bit what we would call, it jerked itself around, jerked higher, jerked lower. And that was just as buyers and sellers kind of came into what may have felt like an empty market. But again, 1, 2, 3, we get a little bit of a 4 going. And if you want, we could use the same calculations. We just throw those up and we're looking at a fourth wave, right? Indeed, right? 1, 2, 3, 4. You got 47.70, 47.69. We have the 8 giving us some support on the way down. And we have price support really starting at 47.89. Then we have the 200 sneaking out past one of the bars, and that's coming in at 47.88, 47, yeah, 47.88, 89. And then we also have the 100 way down below, but we have the 8 coming in at 47.76. So we have 88, 76, 82, and 6 and 70. So those are all, I mean, if it wants to pull back in a fourth wave, there's our support. 1, 2, 3, 4. With 4 levels of support, 3 of them being fibs, the last being the 8. And actually the first, we have 1, 2, 3, 4, 5 levels of support. 3 or 2 from moving averages, 3 from fibs. And the expectations again are that the S&P will continue to move higher, will move above. The expectation is that it will. We'll have to wait and see, but the expectation is that we should break 48.41. And again, we got up to 48.03, I think it was, maybe even a little bit higher. Let's just double check. 48.03. The high is 48.41, so it came within 38 points. So it was a very powerful rally today, and that was across the board. We saw IWM kind of, go up a lot more than it's only showing $3.48, but it was up, of course, a lot more during our regular session. The Russell was up 35.40. So IWM, pretty good day. Pretty good day all the way around for the indices. But we're going to wait and see. Is it a finishing? Because in the Russell, it still kind of appears it's just a bounce. Similar to the NASDAQ, it has enough room to make an impressive bounce, but it's just a bounce. That's where I'm going to complete it for today. And again, tomorrow, let me just double check to see what we have, if anything, in terms of numbers. Not sure. The numbers are kind of light until Thursday, I thought. On Tuesday, we have the trade deficit, and the Fed Vice Chair for Supervision, Michael Barr, is speaking somewhere at 12 noon Eastern. So at 8:30 a.m., the trade deficit. So it looks like it might get a little bit worse than what happened last month, but we'll see. And of course, it could have an effect on the market. So we have also wholesale inventories, but again, look at how they're building this. We got Fed people out talking every day this week. So on Tuesday, we have Michael Barr. On Wednesday, we have John Williams. On Thursday, Tom Barkin. On Friday, Neil Kashkari. So every day, we got somebody out there from the Fed speaking. Thursday this week, we have CPI as well, and then Friday, PPI. So we got back-to-back, Thursday, Friday, CPI, PPI. So maybe we finish it all before, and this brings something back into line, and we just do a nosedive. Who knows? So again, and then on Friday, don't forget, the banks begin to report their earnings. Okay, our next update will be on Tuesday, January the 9th.